Hello. Thank you for taking the time to view this brief video. We've created this video to share with you all the various options available to homeowners who are trying to sell a home in these current market conditions. We're not realtors, we're an investment firm. We've worked with hundreds of other real estate investors and realtors across North America. And together, collectively, we offer pretty much every solution you can imagine for buying or selling real estate with just about any seller in just about any situation. Hopefully, after watching this presentation, you'll be able to make a better decision as to which option would be best for you, whatever your situation is. One thing we know is that all sellers want to sell their home as quickly as possible and for as much as possible. When you sell a home, you've got a lot of different ways you can sell a home. Some of them are quick, but net you less money, while some net you more money, but take forever. So our goal with this presentation is to go over them all so you can see what they are, so you can make an informed decision as to which option might be the best for you and your situation. Let's start off by creating an example of a typical sale in today's market. We'll use a generic house with a current fair market value of $150,000. The price of the home is just for illustration purposes and can be adjusted up or down based on your particular situation. So the first thing we look at is the current fair market value. Then we need to look at the loan balance to determine what is owed on the house. So in this example, we'll say they owe $155,000 now. Whatever your numbers are, we can adjust them to make them work for your particular situation in most cases. But for now, let's work with these generic numbers. Next, we need to estimate how much repairs are needed for the house. In this example, let's use $5,000 in cosmetic repairs. Finally, let's include the typical closing costs associated with selling a home. We will typically have about 2% in closing costs, 6% in real estate commissions, and 2% of the buyer's closing costs. So the entire cost to sell a home in today's market is about 10%. So now that we have our numbers in order, let's go through all the different options for selling a house, so you can figure out exactly which option would be the best for you and your specific situation. The first option is selling your home to a cash buyer. If you want to sell your home quickly, and most people do, one of the fastest ways to sell is to a cash buyer. Let's go through the math. The cash value of your house, if you ask somebody to buy for all cash, is about 70% of the fair market value minus repairs. Cash buyers tend to be real estate investors. These cash buyers pay only 70% because they need to factor in the closing costs on the purchase, carrying costs such as insurance, interest payments, taxes, and utilities and repairs, and forever how many months it takes to resell it. The average total cost for an investor to buy, hold, and resell a property averages around 15%. So their goal is to achieve a net profit of around 15%. Now, we're also cash buyers, and if the cash offer is an offer that's the most attractive to you after viewing this source material, then we can certainly talk to you about that. A cash offer on this $150,000 house with $5,000 in repair would be $100,000. This method takes very little time, and it typically takes only a few weeks to complete and doesn't have a negative impact on your credit. Of course, the downside to a cash offer in this example is that the seller will have to bring the difference between the loan amount and the offer to the closing table. In this case, it'd be about $55,000. So although this option is very fast, it typically only works if you have substantial equity in the property. The second option is to sell your home by listing your home traditionally with a realtor. I work with a number of different realtors, and we can certainly find a realtor to help you list your home. The offer that you'd expect to see is a fair market value with a concession for any repairs that are needed, so this house that we're talking about has a fair market value of $150,000. It needs $5,000 in repairs, so you'd expect to see an offer for $150,000 with a concession for the repairs. Now, obviously, the market is a little tough out there, and you may not get the fair market value, and it may take 6 months or longer to get that offer. But if you do get lucky and get an offer for fair market value, the scenario would look like this. The buyer would request that you take a $5,000 concession in order to cover the repairs. They would also request that the seller has to pay all of the normal selling costs, which are about 10%. That equates to $15,000. So the $15,000 plus the $5,000 in repairs would total $20,000 that the seller would need to bring to the table. One plus is that it does not negatively impact your credit. The third option in this series is called a short sale, and we've done a lot of these in the last few years. So we can certainly help facilitate a short sale for you if this is the best option for your situation. Let's go through what a short sale would look like for our generic home example. Typically, when somebody buys a short sale, it's a little more tricky than buying a regular house. So a typical short sale would sell for about 90% of the fair market value minus the cost of repairs. So in our example here, if you sold your house with a short sale, you would expect to see an offer of around $130,000. It could be higher, could be lower, but that's pretty typical in this market from a retail buyer. Now, the downside to doing a short sale is it most likely will have a negative impact on your credit. Whether the short sale closes or not, your credit will take a hit. And unfortunately, doing a short sale with a closing ratio nationally of just over 25% and a time frame as long as 6 months, you have a high probability that your house will end up as a foreclosure. Short sales take a long time. We've seen it take as long as 17 months. The good news is that the seller typically doesn't have to bring any money to the table. Now, there are a few caveats to that. When you do a short sale, you can receive a deficiency judgment from the lender. In other words, the lender will actually sue you for the loss. You'll also receive a 1099 statement from the lender. The next option is a foreclosure. That's where you just let the lender have it back and they sell it at the courthouse steps. Let's walk through this scenario. So what's the offer? Well, there is no offer. There is no formula. And the biggest problem or downside with a foreclosure is the atomic bomb as far as negative impact to your credit. A foreclosure on your credit will negatively impact your score the most, and it will last the longest. Foreclosure is really the beginning of a 10-year nightmare that starts with having your home foreclosed, and in some cases, employment can be affected by your credit standing. In other words, some people have trouble getting jobs after foreclosure. So the bottom line is that you should seriously consider all other options before going the foreclosure route. Our final example here is sweeping across the state like wildfire. It's called seller-assisted financing. Basically, it is where the seller assigns their mortgage payments to the buyer in exchange for transfer of ownership. In other words, the buyer is going to make the payment on the seller's loan going forward. Now, we want to make it clear that this is not a loan assumption. A loan assumption is when the lender transfers the loan from the seller to the buyer. And most loans are not assumable, and lenders generally don't approve loan assumptions. The assignment of the mortgage is different than a loan assumption in that the assignment is only approved by the seller, and the seller gets into a contractual agreement with the buyer, where the buyer is now responsible for making the payment on the existing loan in exchange for ownership. When you sell a home with a mortgage assignment, just like any type of an owner financing situation, you can sell for a premium. So when selling with seller-assisted financing, the house will sell faster and for more money than any of the previous examples shown today. So even though in this example where more is owed on the house than it's worth, we'd be able to sell it for the full amount owed on the house of $155,000. The best part about this sale is that it did not affect the credit negatively. It would typically close in a few weeks. We have more buyers than we have houses available. You might be able to walk away with a little cash in your pocket instead of having to come to the closing with money, due to the fact that the buyer pays all the closing costs. So, those are the 5 different options that you have when selling your house in today's market. So feel free to contact us to discuss your particular situation in greater detail and to help you choose the option that will be the best fit for you.